All right. What is going on, everybody? Super excited for today's video. We're looking at Chiliz, okay? Ticker symbol CHZ. This was a viewer request for an update. So if you want to see your ticker, your cryptocurrency in the next video, all you have to do is comment down below. If you're new to the channel, smash the like button, subscribe to the channel. We're going to be going over a couple strategies. There's two in particular that you can use. It's the Fibonacci tool and it's the relative strength index. You can combine both of these things together to help give you entry and exit signals and really give yourself an edge when it comes to trading. You need an edge. Trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal. And in today's video, you're going to use or you're going to learn how to use two weapons, all right, that you can add to your disposal and how they work and why they work. All right. So we're going to jump straight into it. Now, I did do an update here recently on this because of, the World Cup going on and everything. There's a lot of attention on this token at the time. There's two main trend lines we're looking at. Okay. The trend line to the upside and the trend line to the downside. This is known as an expanding wedge. And we are actually approaching the lower half of the expanded wedge. Right now, when I said that we were going to go over the fib tool, right? And again, that's this tool over here. The main thing you want to use it for is these three levels, the 38.2, the 50%, and the 61.8% level. These are the three most common retracement levels that there is in the market. And again, it's using the fib tool, which, whether you believe it or not, about 70% of trading is done by algos. So what happens is you're now using a math formula that's going to help you, okay, spot some of the key levels that algorithms are going to be looking at and using as well. Because again, they're doing, it's just math problems, right? So when we speak about retracement levels, nothing is going to move in a straight line to the upside or to the downside. So if we look here, we have this big move to the downside, we retrace, okay, and then we continue down, right? And we make new lows, all right? So it also works to the upside, right? So here's a valid example, all right, on a smaller scale of us, making a push to the upside, we retrace, and then we continue heading up higher, right? And so if you look here, we pretty much held the 50% retracement level. I'll zoom in on that just a little bit more so you guys can see what we're really talking about here. But yeah, we pretty much hold the 50% retracement level. We have a couple wicks down below, but this is, this is showing bullishness, right? Because we're saying, okay, well, we had this big move up here. And you can look for these levels as a re-entry based on your own risk management, right? You can enter at the 38.2, and if you're more aggressive, you can put a stop loss below the 61.8. Or if you want to be a little bit more patient, you can enter on the 50%, or you can try to enter on the 61.8%. And then once you break those levels, boom, your stop loss gets triggered and your risk management looks a lot better, right? If we go over here and look at a position, right? If you come here and you're targeting a new high, right? So let's just say right there, and your stop loss is shortly below, you have a very good ratio, right? You have over a 4-to-1 ratio. Even if we drag this thing down just to previous highs, right? This is still a almost 2.5 ratio right there. So that's really the key to being successful, is having a really good risk to reward ratio, because no strategy is going to be 100%. And you really, but if you're using a good risk to reward ratio, you can lose a couple plays and your winners will make up for your losses. Right now, the second thing that I wanted to go over was relative strength. And using the relative strength index, you can actually use this to spot possible entry signals, right? So the main example we're looking at here is a low and then a lower low. So if you see, the token is clearly in a downtrend, right? The strength of this token should be dropping with the price of this token. That's normally how the relative strength index works, right? If something just, falling, you would think that it's weaker, right? Well, in this case, all right, we actually have a low at the same exact point we have this low, and then we have a higher low at the same point we have these lows. So you see the relative strength index is in an uptrend while the token is in a downtrend, creating lower lows. This is known as bullish divergence. It's an indicator you may see some bullish activity in the future, right? So if we use this, right, as our indicator, and we enter here and we stay in the play, we wait for it to create highs and then wait for it to retrace, right? So you can definitely take profit here. That's 63% trade if you would have sold at those highs, but no one can really time the highs. So once you see the pullback, you can go ahead and take your fib tool out, measure from the low to the high, and you'll get your three retracement levels, and you can basically adjust your stop loss based on your own risk to reward. But as I said, even if you would have got stopped out down here below the 61.8 retracement and you never sold above there, you would have had some form of risk management on and you would have still been up on the play. But ultimately, if you entered off the bullish divergent signal, that was a 130% rally. And then how do you know when to, when you really need to watch out for your trade if you're in a long position? Well, if you're approaching the major retracement levels to the upside, because it's no secret we've been in a downtrend, we've been in a bear market. It's been a brutal crypto winter across the entire market. So we see we're in a huge downtrend. We're retracing. We have this nice bullish pop right here off of the bullish divergence indicator, and we come up, we hit our 38.2 retracement level, and boom, we get rejected, right? And you can use the same strategy again and throw on your swing low to your swing high, find your 3 retracement levels, and you can use those as a stop loss level and get stopped out on the play. Or, you can take profit up around here, around a major resistance level that is approaching. So now that we've kind of gone over that, I'll show you guys just another quick example of bullish divergence and why I really pay close attention to it. Indicated by these circles here, right? So we have a low, we have a lower low, we have a low here, we have a higher low. The token is dropping, the relative strength index is increasing. That's bullish divergence indicator. You'll get some bullish activity. And from the point of the bullish activity, it ran up 220%, 240, and ultimately about 260%. Now, this works to the other side as well. This works to the downside with a term known as bearish divergence, right? And so we see both bearish and bullish divergence inside of this pattern here, this expanding wedge, right? So the bearish divergence is when you have a high right here, and then you have a higher high over here. So clearly the token is in an uptrend, and the relative strength of the token should be increasing with it. Again, we're looking here, we're seeing a high at this point, and then we're actually seeing a downtrend and a lower high. So the token is going up in price, indicating that the buyers are active, right? There's more demand for it, but the strength of the token is actually decreasing. That's a bearish divergence. And if you see here, there was a very sharp drop, off of this bearish divergence. It dropped over 50%. Both of the bullish divergences we looked at, rallied over 50%. So a lot of times, you can help, possibly spot really big moves in the market, but sometimes it's not always going to be a big move, right? Sometimes it may just be a 5% move. So you can't go into this expecting it to always, lead you to some magic play, right? This isn't magic or anything like that. Here's a little example of some bullish divergence, and this is a good example of us, not going to the moon necessarily, but we have lower lows, right? We have a downtrend, we have higher lows, we have an uptrend, and then we end up rallying pretty nicely there, okay? And we can take a look from those lows to the highs. That was about 80-90%. So I mean, ultimately still working really well. Now back to the fibs, okay, back to the main levels you need to watch. Currently I'm not seeing any divergences, okay, both bullish or bearish. So we're really just looking at the candles. There's no chart pattern right here. Some would say that we did end up getting an M pattern, right? So we had a little M pattern right here. But, this right here is not really forming any pattern other than this expanding wedge, right? So we have this trend line down here that we may be, riding as support. But ultimately, we're looking to see if we can get a breakout to the upside, right? So we have our move to the upside here. We have our healthy retracement, and we have gone below the 61.8% level. But if you notice here in the past, the very next day, we shot right back up above, right? So this is a term known as drawing liquidity. So, a lot of times market makers and, or big whales, they need to actually be able to buy in a large amount of tokens at this point. And so sometimes what that does is that triggers people's stop losses and draws liquidity. So all these people that got stopped out and were forced to sell, right, that actually went to a very bullish person who, was going to help push the market back up higher. Okay, so if you see here, we're really just trading right below the 61.8% level. And I did say once we break this level, because, I had already showed you guys this before, and then, we had the bullish divergence indicating we could get some bullish activity. But basically, I said once we break 0.1644, we're going to head back down to this 0.1447 level, right? And if you can see, that's pretty much what we're doing, right? We came down, we tried to retest, and then ultimately we're very, very close, right? We're at 1.509 currently. And the level that we're looking at for our breakout level is going to be 0.1447. So the reason that this is very important is because this is our most recent lows. It's below our 61.8. And if we break below here, most likely we're going to head back down to this 0.1027. But we do have this trend line here. Okay. This trend line right here that we may catch support on before we head down to that level. And it may stop us from reaching down to this level. Okay. Now, that doesn't say we have to go down here. Again, it's if we break this level where I said we would head towards this level, and that's what we're doing. So we're heading back towards this level. And, buyers stepped in here previously in the market. We may see the same thing happen again. Now, what we can look for is we can look to see if we get a bullish divergence. Currently, we don't really have a bullish divergence. One thing that you could say is that we kind of are still holding the bullish divergence trend line from the past. So this initial where we had the lows and then the higher low, if you notice, we're kind of right on that trend line. So I'll make this a little bit bigger so everyone can see it. And this is going to be a nice signal to help you figure out the possibility of, are we going to hold this major support level and stay above 0.1447, or are we going to be able to head back up? All right. And again, it's going to be this relative strength index. If you see this bounce and head back up and hold this trend line, then we're going to be in good shape, right? And it doesn't mean that this thing is going to go on another 80% run. It just means that we're going to be holding, above this 0.1447 level and trying to ultimately go back up to the upside. If you see us bounce here and then break through this level, right, that's when you can expect us to break through 0.1447 and head back down to this trend line. And if we break this trend line, then possibly head down over here to our next support level at 0.1027. Okay. So that's it for today's video. Sorry to come off so bearish. Hopefully you heard that, we do have a little bit of, some things on the bullish side, right? If we have this nice trend line here, we have this major level here, we really can, hold this level and have the potential of reversing. But, in the last video, we were right here, right around in our major retracement levels. And I said, hey, we can go to the upside here. If we hold these levels as support, then we can head up here to our breakout level to the upside, which is 0.298. And then if we break through there, we have a price targets to the upside, some bullish price targets. But ultimately, we did break our 618 retracement level. We're heading to the breakout level to the downside. And if we break that, then we might be heading to, some of our bearish price targets. Okay. So keep a close eye on it right now. Definitely keep an eye on that relative strength index bullish divergence trend line on the daily chart. That's going to be something pretty key to watch. And if you're watching this video later in the future, why don't you just go ahead and check and see what happened, see if we did get the bounce and we broke through, and then see if the candles ended up dropping, or see if we held this level and we ended up going up higher and we didn't break 0.1447. And, just get used to charting some of these things on your own. So appreciate you watching the video. Smash the like button, subscribe to the channel. Again, if you're new, I do viewer requests every single week. So all you have to do is comment down below and I'll be happy to make a video on it as soon as I can.